Good afternoon and welcome to the market wrap for Thursday, the 12th of March. And look, today the Aussie market snapped its two-day winning streak, sliding by around 1.3%, ending the session at 8,629 points as investors continue to digest the rapidly changing situation in the Middle East. So that's put us on track to fall by around 2.5% this week, of course, with one more session left tomorrow. And that means the Aussie market is on track to fall by 6% this month at this stage, but we're less than halfway through the month, so there's still plenty of time for things to change. And of course, next week could add more volatility again, with the RBA's interest rate decision being live, with markets supposedly pricing in roughly a 70% chance of a rate hike at next week's meeting. So if we do get that back-to-back rate rise, markets could potentially get a little spooked. Plus, of course, the rapidly changing situation in the Middle East, which is creating a lot of uncertainty as well. So lots for investors to be digesting. But I will quickly say before we go on that while sometimes it's hard to not act emotionally when all of this stuff is going on, it's important to look through the short-term volatility and look through all of those headlines and focus on your investing goals. Now, looking across the different sectors today, you can see that 10 of 11 sectors fell. Let's talk about oil, because it was another volatile day in the oil market. We saw Brent crude futures jump to $100 a barrel at one stage during the session. There's obviously been a lot going on there. It's quite interesting because we did see the International Energy Agency agreeing to release a record amount of oil from emergency reserves in an attempt to calm surging prices, but that didn't happen because that's been overshadowed by the latest developments that Iraq has halted operations at its oil terminals after 2 oil tankers were targeted in Iraqi waters. On top of that, Oman has evacuated all vessels from its key oil export terminal as a precautionary measure after its nearby waters were attacked by Iran. And don't forget, major Middle Eastern producers have significantly cut output, tightening global supply further. So it is a rapidly moving situation that continues to heighten the volatility in oil markets, particularly with some analysts forecasting oil could jump as high as $150 a barrel, depending on how long this conflict lasts. So on the back of that, energy was the only bright spot amid a sea of red on our market today. We did see energy lift to its best level in about 2 years, up around 2% today. But on the other end, we saw tech slump most. It was down around 3.5%. Real estate fell a hefty 2.5%, while mining and financial stocks, our two largest sectors, fell by around 1.5% each. So that really added some additional weight to our market today. So the winners list was mostly made up of oil and gas giants like Woodside, Santos, Beach Energy, and even Viva Energy rose despite trading ex-dividend today, while coal miners like Yancoal, Whitehaven and New Hope also gained ground, with Yancoal actually doing best today, up by around 10.5%. And Collins Foods, the KFC operator, announced that it's buying 8 KFC stores in Bavaria centered around Munich as it looks to grow its footprint in Germany, which has been identified as a key growth market. On to some of the losers. Diversified miner Hyperion X released its half-year results today, doubling its net losses. This was on the back of significant expansion costs, with management highlighting that the spending reflects a major build-out of its titanium manufacturing capabilities in the United States. So today, investors clearly not happy with its results, with its share price down by over 14%. Super Retail Group was among the list of stocks trading ex-dividend, so its share price fell by over 5%. ANZ lost the most ground out of the 4 major banks, and plenty of the retailers, including Temple & Webster, Lovisa and Guzman, were among the top 10 losers today. Now, in terms of the Aussie dollar, we have seen it pull back from yesterday's highs when it did reach its highest level since June 2022. It touched 71.8 US cents on the back of those rate hike expectations, but it has since come down from those levels. It's currently trading around 71 0.1 US cents, weaker against the euro and the yen as well. Now, looking ahead, it looks like it could potentially be a rough session on Wall Street, with all three major indexes pointing down by around 1% at this stage before the market opens. Tonight, we also have weekly jobless claims coming out of the US, and tomorrow, plenty more stocks trading ex-dividend, the likes of Car Group. WiseTech is going to potentially be a big one. It's one of the biggest stocks in the tech space, and also Guzman, but some stocks also paying out their dividends to investors, including the likes of JB Hi-Fi, IAG, Whitehaven, Ansell, and a couple of others. Have a nice night. See you again tomorrow.